When thinking about creating indicators or patterns that will work on stocks, it's a completely different problem to what you would be faced with if you were looking at futures and options. The primary reason for this is actually the fact that there's just so many instruments, and so it's really critical that you create code that is sufficiently rare that it makes sense and you can actually trade it and sort of build a portfolio of positions. PowwerPlay is a study that is specifically designed for daily data on stocks. So if we were to put this on futures markets or foreign exchange, you could go through a lot of data and you just wouldn't see any signals at all. They'd be so rare. What PowwerPlay attempts to do is identify what are the 5 things, as far as I'm concerned, that can actually make a stock move. Namely, quarterly results, unexpected news, takeover targets, message board hype, and what I call those in the know. The chart we're looking at is a daily of Apple, and if we were to go back through the history, we see that actually there's only been 2 signals in the last 6 years, I think, in this stock, which highlights how rare it is for the pattern to occur. It's marked by a green bar, and there is a couple of qualifiers that you can put into it to either increase or decrease the number of signals you want to see. I've now gone to the setup, and there's really 3 things that you can set up here. First thing is to say, do you want to require a breakout? It's possible to get a PowwerPlay signal against the trend to end a corrective phase, although my preferred method is to say that I only want to take it in strength, and so I have the require of breakout. And all that's saying is if I'm going to switch that on, it has a default to say the price is making a 50-day high. You can play around with that if you wish. The other code is to say whether you're going to use the high or use the close, and the setting is more aggressive if you use the high as opposed to the close. It will give some slight differences in signals, but quite often you won't necessarily see them. Because we want to use this indicator and it is extremely powerful, we've created it so that it's also a watch list, so you can create a watch list and then go through your portfolio that you're interested in, scan through, and it will tell you any stocks that have produced a PowwerPlay signal on the day. Just for reference, I've also put the bullwhip study on there, which is different to PowwerPlay in that that is always trying to catch the end of a corrective phase and that the uptrend is going to restart. I've now changed the settings so that it can get the corrective phase as well, and this is Google on a daily chart. And these are the 2 most recent signals, so again you can see that they're a considerable way back. One was created by a huge gap and an expansion of range and a whole new trend, and the previous signal was getting a corrective phase and then a reversal back up. So just an example of the 2 different types of signals that you can achieve. The characteristics can be summed up in some ways when you look at a chart that is quite often pretty slow. So here I've taken Microsoft, and it's got both types of signal appearing. I'm just going to scroll back and show you the history of it, and you'll see that actually there's quite a lot more than what you would get in a stock that was a bit more volatile. Some of the signals are very good, some of them not so good, as we can see in the most recent signal. And if I just scroll back, you can see the different types of signal, or the different areas of where these signals can actually appear. So they don't necessarily have to be in a trend. There's a couple of examples here where we've got buy signals at the bottom of sideways. An important caveat is, if you're looking at IPOs on new stocks, the nature of how the study is created means that when data first begins, it will flag signals that aren't actually true. So this is GoPro. It takes at least 25 days, or if you think about it, a 50-day breakout, if you've got that switched on, before a study can ever be, or a signal can ever be valid. So you must have 50 bars. Finally, I'm just going to go through a couple of recent signals that show some examples of different sorts of news events. This is code PCYC, and what we have here is actually there was 2 buy signals, although the first one was perfectly valid. Somebody obviously knew something got a bit of hype around it, and then lo and behold, there was a takeover target. It's worth thinking about the scale here. That original signal was at around $185, and it's jumped to $260 a couple of weeks later, and obviously now the trade is all over. This next one is an example of message board hype. The code is GENE, G-E-N-E. Nothing been going on, and then suddenly some massive expansion of range. What I always do is when I get a signal, I like to find out what the reason is for the signal. In this instance, suddenly some real hype. It's an Australian stock quoted in America about absolutely nothing really. Everyone was saying this is the flavour of the day, and it did nothing for a few days and then took off and went from $3.50, peaked at about $11 just a week or two later. An example where you do get message board hype, you really do have to be pretty quick on your toes. It's not something you necessarily want to hang on to. This is another example of a combination of message board hype and then also a story being getting the market going as well. You can see there's been two signals. There was one earlier on in the year which didn't really work. Something suddenly happened. There was no story. It didn't develop. And then a couple of months later we can see that there was a great big gap higher and then another signal. This time there was a story behind it. George Soros had taken a stake in the sorry, not George Soros, got the wrong guy. The person who had been buying the stock for a long time had increased his stake. That got the message boards going, and again hyped all the way up. The move was pretty huge. It went from $4 and peaked in the low 20s. And finally, take a look at a stock that's been a real darling of the market the last year or so, and that's Blue, B-L-U-E. Example of two signals. The first one is really in before anything really got going, and we had a signal in sideways, and then a positive analysis of some potential drugs that they're developing, got a breakout and expansion of range, and the chart is still very much going higher. Finally, just a couple of caveats. If I'm looking at quarterly results or unexpected news, because the world is so big, I do like to have a little bit of fundamental knowledge as well. And so I'm interested in expansive signals or power plays, providing that the stock has some sales growth, has good return on equity, basic sort of stuff. The only area where I wouldn't look at that is for things like biotech, where quite often they're not making any money and it's a little bit more of a speculative trade. Final thing is to do with ETFs. This is the biotech ETF, and it's just an example because ETFs, a lot of them are actually quite slow and they're smoothing out a sector. It's very rare to actually get signals, so you normally would be more interested in using the bullwhip or time continuation and using that in conjunction with some of the peak studies, expansion and energy, to understand when the corrective move is over and then getting involved. Breakouts are going to be pretty few and far between.